And
Good evening, all. Calvin, you there?
hi there, David. Sorry, my mic was muted. Good evening.
Oh yeah, no worries. How you feeling? You back to 100%?
Yeah, I've been a little bit better. I'm probably like 80, 85%. So I was out for a
Yeah, so
couple days.
yeah. No, that tis the season, man. This is the late summer, rolling into fall.
Right.
All the bugs, start hitting.
All the kids are back to school, and I don't have kids myself, but everyone's mingling again. So it's probably
Yeah,
the cause of
yeah.
it. I didn't list this one on the schedule on the website properly, so I'm not sure if everyone gets to it, but I'm going to do it anyways, and hopefully I'll make the schedule a little bit more clear. And I think what I'll do is also add a couple of dates because I think two per week might not be meeting everyone's schedule. Because I think the last one also the turnout was quite low. So hopefully I'll
Yeah,
do some other
yeah,
ones through the week.
yeah. That works. I mean, I'm good. I would think this past weekend I was had a social commitment, so I didn't make it, but
Right.
when my schedule permits, I'll jump in. But I certainly the video you posted was very helpful. I can tell you made a lot of refinements to your approach, and just the quality of the video, you had transcription, you had the dual screens. I mean, all that stuff,
Thank you.
made it really easy to follow.
Yeah,
Really
it's
easy.
I just switched to the Zoom, and really that's all automated. The transcriptions, and so forth. That's all done without me doing anything. Essentially, I just
Yeah,
record, and it's they help with the speech recognition. It does a good job there. So
yeah,
I'll continue that. I thought this price mapping template, um,
yeah. It's
could
very
help,
helpful. Yeah,
and it's a work in progress for myself too. Like we don't. Sometimes I realize later on that a certain range might be relevant, and whether it's relevant every day, it's not always clear. Some of them, like the weekly ranges, I haven't been mapping as carefully as I used to. I used to always map the weekly and the monthly range,
right.
just to get an idea if there's a larger pivot we don't see. So that's something we could do. But today, I think I think it'd be interesting to know where the market trends next. So I thought, doing another exercise today or this evening would be useful for the rest of the week.
Yeah, yeah. It
Yeah.
was a yeah, a little bit. I didn't do any trading today. But I could see from looking at the after I got off my work computer onto my trading machine platform, I could see where the Apple News and whatever, people getting positioned for CPI. I mean, through the market and a little bit of chaos. I feel like they ran it up to
Yeah.
get out a little bit ahead of the CPI,
Right.
and so I don't know. Who knows what the CPI is going to look like? I think that could have a pretty bring a lot of volatility in tomorrow.
Oh, definitely. That's whether
Yeah,
the algos or whether it's forced. There was always a lot of it kind of like spikes,
yeah,
craziness that happens. Maybe that a lot of people monetize that way. Some
yeah,
chaos. So yeah, so I'll start here. I'm gonna press record again, and
yeah. Oh, yeah. Sorry
we'll
about
see how
that.
it
Yeah, go ahead.
goes.
Yeah,
Oh, I think we have been already recording for a while. My bad.
yeah. No worries.
So we can get to the exercise. And feel free to put your comments in. It's supposed to be a group discussion, but and since you and I we kind of have the gist of it already, but I think those who might be new to it, I like to go from the bare bones every time in case they're watching the video the first time. So basically what I try to do is I look at um mechanically how far the price may move on a certain day based on a few things using the camera, the pivot points, and using fib extensions and retracements. And so one thing to look at is the weekly range, just to get an idea of direction of, and whether or not there has been a test of certain key supports. So on here, this is I guess this is almost a couple of months or more of price action here. And so if we just go down to the 1 hour maybe, so I think here we've had this big dip the last day and a half, sorry, the last week or so, and we tried to kind of move past it. So what I was interested in looking at was, maybe I'll just remove this dip here, was how far this moved back up yesterday um, was relative to, I guess, a fib level. So if you use 1 at the top, which is basically the full range since the beginning of this month, and we use 0 at the bottom, that may be an interesting range to take a look at. So it's none of the stuff I have here. I have a template that we can go through to map the overnight levels to keep an eye on, and then also what to look for in the New York session open. And I'll change these values shortly. But what I'm interested right now is just to get overall sense of direction, because this will help us in terms of trying to figure out what ranges to map later on. Is what happened, I guess, today and a bit after Monday. And so from last Friday, there was a big sell-off into Monday and Tuesday. And if we use the 0 at the bottom, basically we had the big bounce off Thursday to Friday. Sorry, this is all of last week. And that kind of rallied for a couple of days. But once it hit the 50% mark right here, exactly 50%, and I tested it again this morning, or I guess this afternoon. Once it hit this 44.90, it bounced off again. And so it seems like there's a big block of sellers who are waiting here. So I'm just gonna mark sellers. I don't know if that's resistance or not, but there was a lot of selling right here at the 50% level. And that's something to keep an eye on. And I just plot 50% weekly. It's more than a week. It's almost the last 2 weeks essentially. And now we came down all the way to the 4460. Well, this is ES, so let's use ESZ now because I think everyone's starting to trade with that.
Yeah, and then quick question for you, Kevin. How does the
Yep.
contract roll impact your approach, if at all?
Yeah, that's a good question. I know some people try to mind the gap and say, there might be a gap movement post rollover date where the price may try to be traced back. And I know people may trade that because they feel like they're going to be positioned with the same amount of money, like basically the actual dollar cost, and so they may adjust their size accordingly. But I think that doesn't really make a huge impact, so I don't really adjust my calculation too much. Besides making sure that what I'm using comparing to the past ranges is been adjusted. So if I'm looking at the charts, I want to chart always the same contract, and if I'm using just I guess the standard symbol that does the adjustment for you, then you want to make sure you select this adjust for contract changes. And so that was, sorry, I think someone just joined. Yeah, you want to adjust for that contract change there. Hi Nick, welcome to the call. And so that's mainly it. I mean, in June we had the June rollover to September. I guess the week after that there was a big sell-off, and whether that was attributed to the rollover date, I'm not too sure. So I don't have a lot of experience in trading that rollover date, and I don't tend to hold my position through that time period, like that Friday when it expires. And so that's where I guess I don't have a lot of experience on that. David, I don't know if you have some thoughts on it.
Yeah, I don't have a ton of experience. What I do, I will map on my chart is any gaps in the rollover.
Right.
Because what I've seen is that the market has a tendency to just like with any other fair value gap, to want to fill
Right.
it in a short term. And it's interesting you noted the last rollover. There's still a pretty big gap, below us from the last rollover. There's a pretty significant gap.
I think it was around here, right?
Yeah. I don't have my trading view open to note it, but it's
right.
yeah. I think it's in that 43.50 area, 43.25, 43.50. It was a pretty significant gap.
Right. I think
And
it was somewhere here.
yeah, and they generally get filled. Kind of not that day or that month, but at some point.
Right. Yeah, that's what I've heard as well. And
Yeah.
a lot of people will arbitrage that and buy or short ahead. A short, basically, they'll take a short early and they'll hold for the next couple of weeks until that comes back down. I didn't see it so dramatically. I was looking for that last time around, and it wasn't so evident. But I think that would be interesting to play that type of move at whether with options just to lower your risk. With contracts, I think they move really quickly, right? Like if you're just holding the standard futures contract. So I'm not too sure whether or not that gap gets filled before the price kind of regular price movement has already transpired.
Right.
Yeah, so Nick's just messaged on the chat there. Good to finally join you guys. Thanks, Nick, for joining. Yeah, we just started the process, talking about, I guess, the weekly range here, and David pointed out very timely, we have this rollover coming soon for the contract, but we're not really sure how to map for that. So that could be something if someone has thoughts on in terms of mapping that gap and how do we adjust maybe our fibs and our cumulative pivot points. That'd be important. For now, I just assume that that doesn't have an impact, but maybe we'll learn that in a couple of weeks. So here we had that 50% retrace of the weekly range, and then we had to shut down right there. And then today here we can reverse that, I guess. Excuse me. Yeah, basically what I was trying to point out here was that there was a big support level right here at 4509 on the ESZ, and that's kind of our new area of support. I'm not sure if it's a relative discount, but it's a discount in terms of this weekly or bi-week 2-week range now. So we're kind of bookended by these two fibs right now. And typically when you have this big swing that crosses 50%, and if you can look back further on this monthly or this whole quarterly low here, I guess, we did reach a 50% retrace on that recently, and we bounced, or almost 0.618 retrace. So overall, we're still in this kind of upward trend because we have found support here. Now we've come down. But typically when you have this huge move and then a 50% retrace, there tends to be some consolidation or sideways movement in a narrower range. So here we have this 30-point range for today, at least. Still a really wide range to trade, I think. You can make a lot of money there. But we might not see this huge drop because now we've filled this gap twice. Now we fill this gap, we fill this gap, we fill this gap. So I think a lot of the gap related to imbalances in liquidity, buy side, source side have been, tested out a bit more. And so these gaps no longer become as a big of a mover in price. So we do still have a gap, gaps below, but above we might have bigger imbalances, but only way up here in this 4,600 levels now. So the movement of price, it will be more constrained, I guess, or not supported by that gap movement as quickly. So that's all to say that for the wide range, you can still keep a lens on this. So I might leave these purple boxes on there and to take a look at later on. And I mean, this one's a kind of an interesting one as well for the weekly range, but I don't know if we'll get there tomorrow. So if you can just go down to overnight range now, and I'm just going to remove that weekly fib so it's a bit cleaner. We have here now 6 o'clock open here, and then here are the Camarilla pivot points. And for some reason I have the P as well, which personally I don't find that so useful to trade around, but a lot of people do with the pivot point. And I think the volatility is still relatively high in the last 4 hours in terms of this aggressive sell-off, aggressive buying. And David pointed out timely that it was related probably to the CPI news tomorrow coming out, and Apple kind of the event for their new iPhone. So that might be an irregularity that might either cause some more irregular technicals tomorrow. So maybe that was planned in order to expand the technical level, or there is actually some real liquidity there. So we'll see how that plays out. But in essence, that what happened there was this move here expanded the daily price range just by a little bit more than what we would have seen without that movement. And so if I'm just going to draw or just point these ranges, I think just by Camarilla pivot points, we should see support at least here. And I was just drawing them like this yesterday and the day before, and it seemed to work well, but you can see how that lines up with the fibs. So all I'm doing is right now just drawing these boxes where mechanically that might be where we have a limit for price action or price movement based on just the daily price range. So I'm using daily base range. I want to use the full range, so I'm just going to take that off and just make sure that's adjusted. So it's the same right now, and just that gives us about 0.22% move higher, so 10 points, and below only 0.16 movement. So that's not a lot of movement overnight. Typically for ES, we do see the price move a fair bit, more than 0.25%, sometimes 0.4 is the average. And beyond that, 0.7% is sort of the max range typically. And so I think that's not going to be a very wide range. Maybe that's what we should expect for pre-CPI news release. But if we want to use the fibs now and just to compare that, so I'm going to leave this blank for now and then come back to that. And then we want to use what I typically suggest is use fibs on the full range and then fibs on the regular trading range to get an idea of how far the price can expand from the current day range, and also how much what would be key level for retracement. So if I just use the full day range, it's going to still be the same as the RTH. So you can see here the high here happens to also be the high for the day, and the low for the RTH is the low for the full day. So we only have to draw one fib there, or I guess one fib in each direction. So it's pretty straightforward. I think most of you, well, two of you on this call today, short, small group, are pretty good at this already. So I'm just going to run this quickly for the video session, video watchers. So we have the 1 at the top and the 0 at the bottom here, the low, if you're just drawing this for the first time. And what you want to look at are these fibs, the 0, 0.26, 0.236, 0.382, 0.5. All of these numbers here are quite relevant that I've marked. And what we're curious to know is from a Fibonacci price range, I guess looking at using the ratios as a way to expand the price, how far could it go? And typically price may expand to the 1.272 or the 1.141 range. That's still a buffer of 4 points. So I'm going to mark that here. I don't know why it's in black, but I'm going to mark them in blue or green. And I think my color codes change every day. But here basically would be sort of the max range of expansion if we all of a sudden had some good news to start the day. And that's only 0.7 and 0.88. So that's a reasonable amount of expansion from the current range. And then on the opposite side, same thing here. And why that's useful to demarcate on your charts, basically these values here is 1.414 and 0.272 is price tends to, when it reaches this area, it tends to pivot and go back towards the mean or towards the price range that we were at earlier, which is very similar to what happened today. If I just show you very briefly here. I think I was trying to draw that here. For this price range, this is the full, so the regular trading session range for yesterday. And this is the 2-day range. So it went right to the 141. A little bit beyond it, but almost exactly to that. And then we've had this first bounce. So we can use the prior day and just compare, like that's the type of bounce we may see tomorrow as well. I can just code that in red. So pretty straightforward. Nothing too complicated there. Yesterday we had a little bit of wider range. So, if you use the full day range here, you can see we didn't really get anywhere close to that 1.272. So you have to use some judgment here, and watch the market during the day. If we did come back up and we had more time, perhaps we would break down further. So this 1.272 still in 1.4 expansion zone kind of lines up with this expansion zone for the RTH from today, this level here. So that's kind of interesting to see. I mean, they're not exactly the same, but we're talking about roughly 1 or 2 points. So roughly speaking, this expansion zone below is still this next area of interest for us. And that's based on the Fibonacci's Fibonacci levels. And on the opposite,
so just one quick comment, Kevin. The interesting thing is, based on a market structure, I thought that was it 45.15 to 45.20 area would hold,
right?
Because it was the neckline of the inverse head and shoulders.
Right.
We've been forming. Yeah, you got it. But the fibs were more reliable than this market structure was. The price action structure was, today, because I was like, for sure, when I was pulled up the price map this evening, I was like, hey, I don't think we got below that neckline, because I think this uptrend is going to take hold, and it broke down. So I'm sure a lot of people got caught on that.
Yeah, I also, I use the fibs to measure a lot of times too, but a lot of times if you see this, like you said, these prior supports or these prior pivots, that can be very important to take note of. And I wasn't too sure either. So after 2 o'clock, I couldn't get a good read on the data, the chart. And so, it was a good chance that we get down to here, or even here, but it wasn't very, very clear. So here, I would just wait for that, at least a bunch of green candles to take place to bounce. But here it moved fairly quickly, so it was hard to
Yeah.
tell. I think a
Yeah.
lot of folks might have jumped in here, like you said, the 45.15, which
Yeah.
if we looked at just using the fibs from the prior day range, I mean that was almost this 0.786 area. So
6. Right. It's a
yeah,
discount area. Yeah.
yeah, the discount area.
Yeah.
So that's what I would, if I would have suggested to people to take an entry, it would probably would have been right about here, and I would say that's a local discount. But before I could even say that, I typed that out on the Discord. It went right. So I was like, wow, I don't have to be proven wrong. It went right through it. I think it went through it once this morning.
Right.
And so I was thinking, oh, maybe like you said, a double bounce here. There's some support.
Right.
But yeah, it went right through that. And
Yeah, there was a couple of places where also the IB high, it went above the IB high, and then it sliced through that like a
right,
hot knife through butter.
right.
And then it also, that discount area, it almost like it wasn't there. It just kind of shoot right
Yeah.
through it.
Today's IB high was quite interesting. Like here, the low, and
Yeah.
here the high were, if we just took the IB high and low, I just do it very quickly here. It was roughly 1.272 on the bottom. This is IB high and IB. I think that was the IB low right there. And if we do the same thing on the opposite side, roughly there, I think that's I mean, we overshot by a little bit, but it was 1.412. But so it was almost like this expansion zone for both sides, but not exactly. But I mean, we're talking about 1 or 2 points, and I think that was a good way to identify maybe where we could have pivoted.
Right.
So that's what I had marked on my other charts. Was I only used the IB high and low today. I didn't look at the prior range because I got to my chart late. So we'll see how that plays out. I think today, because it came down so aggressively on this range and there seems to be this kind of further expansion zone, I would still keep an eye on this lower area as perhaps the max low for the day. And that also corresponds to this S4 Camarillas. So I'm just going to remove some of these pivots here. Oops. And that purple box that I put on earlier, that was the 0.382 weekly. And so that's a really wide box, but that 0.382 weekly maybe aligns a little bit with this red box as well. So we should see some discount buying from the weekly range around here. So perhaps this can be a pivot a couple times here before we may see a final flush down to the bottom. But that's not for sure that we'll flush. So I think this would be, for me, the best premium or the best discount, I guess. For and plus expansion. Okay. And on the opposite side, it wasn't very clear. But here it kind of rotated very quickly, and we had this overnight as well. So it's kind of fair to think if we cross this area, then the next expansion zone should be above these points here. And I think if you look to the left here, there's not a lot of fair value gaps until we get to the 55 level here. Maybe there's some around here, 56. Can turn on this. I don't have that set up for that right now. So I'm kind of all over the place right now, but basically my full day range is still between these lines here and these lines here. And I'm going to remove the Camarillas just for a moment here, just to make it cleaner. And this box here, I'm not sure what I drew this for. I think that was the I'm not sure. I think that was the weekly range. That's correct, 50%. So I'm just going to remove that for now. So tomorrow, I think just based on using the RTH, or it's also the full day range, you could look at this as potentially where we're at right now is a discount area. If we get past it, we found some support. So I'll wait for price to come up and come back down and test it a few times, but it seems quite similar to where we're at right now as price range. So, but I'm going to mark it anyways, how we've been doing it the last little while. Excuse me, I'm just trying to follow my color coding. And typically we would see some selling pressure around here or premium area around the 0.32. So I'm not sure why these levels are not exactly the same. Tuesday here. So I'm just going to adjust this. And I'm going to call that the selling a premium area. So you could use SMC or some other tools to get you these same areas. Probably if you use an SMC tool, it would identify the same windows. But that's how I would play this tomorrow, or overnight at least. This is my range for the overnight. And then into New York open, typically we see price shoot up into these brackets. So I'm just going to fill this out afterwards, but basically we have here full day range. Using that range, we expect some pivots here, and then the expansion to this area here and here. And if you wish to use the overnight range later on today in the evening, if we do get a new low that's lower than here, then you can adjust your range for this further expansion and the discount window. So basically you can adjust these windows if we see a wider ETH range, and if ETH stays narrower within this RTH range, then you can then come up with another set of premium and discount windows that might be relevant for the open only. So I kind of skipped through a bunch of things today, but if you find that useful, what I'll do is I'll put these numbers into this chart, and I'll post the chart as well. But they'll correspond to these windows here and the expected max. So it's fairly simple. I just used, again, the RTH, or in this case, it's also the full day range. And so we only have one set of fibs to look at. Not so interesting. If you want to use the weekly range, we can do that as well. If we think that the CPI news or whatever news comes out tomorrow will become a big source for buying and selling, then you might want to use maybe a Thursday low and the Monday high as a wider range. It's not as standard price range to look at, but it's still the relative recent high and lows, and that might be relevant. We might not get all the way to the 1.272, but you may see some sort of either A, retracement going back up, or B, expansion going down. So this would be maybe the expansion level going down, and then if I do the opposite here, and I'll move them to the side so we can keep them out of scope for now. But if we do see some very high reaction, I guess, high volume reaction to news tomorrow, these might become relevant. So that brings us just slightly bit higher than where we marked the 1618 at 4458, and all the way up to this 54569 to 4581 level. And I think we marked the purple area earlier as, I believe, I'm just going to go back out here. Yeah, the 50% retrace area for this. Sorry, the 0.78. Excuse me, I'm all over the place right now. I'm just going to mark it out again, that fib, so we can have that on the side. Yeah, that's the 0.386 premium area, or I guess if you flip it around, the discount area. And on the opposite side here, the 0.382 for the monthly is also where the purple box is. It's potentially where we might see the expansion for tomorrow. So here it's, I just mentioned here, that's the expansion if we see expansion on the wider range. So it was all over the place there. So we just to reiterate the last box here. So I just drew a fib from the Thursday low to the Monday high, which is a wider range, but it's relatively speaking from this week, the most recent high and the most recent low, or the most, I'm all over the place, the highest high and the lowest low for the past week. And why that's important is we may have a lot of volume on the news tomorrow, so it's good to know where potentially, if it overshoots today's range expansion, this would be the next area of interest here. And I'll do the same box on the opposite side. And so what I can do after this is I'll label all these boxes and then I'll post the chart. And hopefully it'll be more clear once everything's put together. But I'm basically looking at these areas of interest tomorrow here. This box here. And we already drew this box here. So it's very rough here, but basically those are the 4 zones. And the purple one is basically it's not so important, but it's really another area of support for the weekly range. Hopefully that's a bit clear. I was not as not as on point today. David or Nick, you have any questions? Feel free to.
Yeah, I'm good.
You're good. Yeah,
Yeah.
so I'll post these charts and I'll clean them up, and then if I see anything different overnight from this range, I'll let you guys know, and feel free to add your thoughts too on the chat. Nick, you got any thoughts there? Are you good? 100% smooth all the way. Okay, good. Yeah, it's all over the place, but I think the two of you have a good handle on it, so I was a bit less instructive there. But hopefully you guys have a good trading night. We'll see how it goes, and I'll post some more charts into the morning.
All right, Kevin. Hey, thanks.
Thanks, guys, for joining the call.